Assets and liabilities are two fundamental components of accounting that help in understanding the financial position of an individual, business, or organization. Assets refer to everything valuable that an entity owns or controls, which can provide future economic benefits. These can include physical items like cash, inventory, land, and buildings, as well as non-physical assets like patents, trademarks, and goodwill. Assets are typically classified into current and non-current categories. Current assets are expected to be used, sold, or converted into cash within 1 year and include items like cash, accounts receivable, and inventory. Non-current assets, on the other hand, are long-term in nature and are used over multiple accounting periods, such as property, machinery, and long-term investments. Liabilities, in contrast, represent obligations or debts that an entity owes to external parties. These obligations arise from past transactions or events and are expected to be settled through the transfer of assets, usually in the form of cash or services. Liabilities are also divided into current and non-current types. Current liabilities are debts or obligations that must be paid within a year, such as accounts payable, short-term loans, and taxes payable. Non-current liabilities, also known as long-term liabilities, are those that are due after a year or more and may include long-term loans, bonds payable, and lease obligations. The relationship between assets and liabilities is crucial for assessing financial health. When an entity's assets exceed its liabilities, it generally indicates a positive financial position, meaning the organization has more resources than debts. Conversely, if liabilities exceed assets, it could suggest financial difficulties or insolvency. This relationship is formally expressed in the accounting equation: assets minus liabilities plus owner's equity, which is the foundation of the balance sheet and double-entry bookkeeping system. Understanding both assets and liabilities allows stakeholders to evaluate an entity's financial strength, operational efficiency, and overall viability in the short and long term.